Weekly stock market update. I'm going to start doing these. This is the public version, so it's redacted, but it's well worth it. So remember, it's for education, not a solicitation to buy or sell any particular security. Let's just go through some of the things which are seemingly on the market's mind. I'll cover some of the political stuff. The ones at the moment are not the ones actually listed here. I'm going to go through them. First of all, well, some of them are Trump tariffs. And the August the 1st deadline, ignore it. Everyone expects him to cave in, even if he doesn't. And there's a dip. If you've got quality companies, you'd just be buying into the dip. The trick is always quality companies. In terms of valuations, yes, they're steep at some areas, but what you've got to look out for is earnings. And what you've got to remember is in the short term, the market is always irrational. You will not understand it. Don't even try to understand it. And because of the 10% of the times you do understand it in the short term, you'll think, why can't I understand it all the time? It's a classic mistake of logic. Longer term, it's fed on earnings, on profits. As long as humans like profits, you ought to focus on profits as well for the companies that we're looking at. And it's earnings season in America 4 times a year. Kicks off, well, today. So keep a very close eye on the big companies and the earnings that they are set to produce. So with that said, what should we be worried about? Well, as I said, you can ignore tariffs. Anything else coming out of the Middle East? Nope. Anything else which might wobble the markets? Well, actually, we're in this Goldilocks sweet spot at the moment. Some of the market is expecting interest rates to be cut before the end of the year, so they're buoyant. And others feel that even if they're not cut, everything still looks fine anyway. So they're buoyant. So what are you left with? You're left with the 10% who are miserable. They're always miserable. They always think there's going to be a crash. Given the resilience with which the market rebounded after the Trump tariff cuts, tariff threats in February, and then the pullbacks, I think the market has now decided to go the other opposite extreme, whereas before they were easily spooked, readily spooked, maybe genuinely should have been spooked. Now, nothing seems to be scaring them. It's like they're on their 3rd horror movie, so they're not so scared as they were in the first 2. There will be dips. There will be panic. When the market is euphoric like it is now, expect the downside to hit short, sharp, and when it does, you shouldn't panic. Okay? Now, remember, none of this is advice or solicitation to buy or sell anything. So where are we on the S&P 500? Well, you've got the V-shaped recovery. There you go. That's your V-shaped recovery, which is very much like COVID, not like 2022. There's only 2 types of moves in the market, either slow and with a longer duration to recover,